Hi everyone, got a special edition today with all the people from SAS London who are entrepreneurs. They help other entrepreneurs. So we thought we'd do a little session here, how we brainstorm. You're going to love the value we're going to create here. And there's a lot of comedians here as well. So you're going to love that even more. And you're going to see their personality come in. Hi everyone, I've got Ish here from our SAS Power Group and we're just going to have a quick little catch up. Don't you love this? Ish.
See, how are you, brother?
I love it, man. I want to ask you quickly, why do you love SAS London? This is the key question.
See, the reason why I actually really appreciate SAS London because it allows my clients to be as tax efficient as possible. Wow. I get to meet like-minded people who've got knowledge, a power team around me, which I can leverage off in terms of knowledge, even like yourself, in terms of structuring a company, whether that be insurance, finance, and it's a huge value add for all of my clients.
Love it. He's answered the second question I was going to ask. Why do you love meeting entrepreneurs? And he's explained why. It's huge.
It is huge, and I think the reason why I'm so appreciative of being a part of the Power Group is because I really want to help people become as tax efficient as possible. So with both incentives like land remediation and research and development, which a lot of people that don't necessarily know about, I can really help entrepreneurs keep more cash in their pocket.
Don't you love it? That's the value. That's why you got to love SAS London. Thank you, Ish.
Thank you, brother.
Perfect. Hi everyone, we've got Ricky from the Power Team, Stroke Power Group, whatever you want to call us, from SAS London. Ricky.
How we doing?
Oh, love it. Ricky, why do you love SAS London? The question.
Oh, no, I'm joking. SAS London. So, to be fair, I started coming to SAS. Dan rang me and went, look, I'm putting together a networking meeting. I thought, oh no, not another networking meeting. So I went and, and I was pleasantly surprised because the calibre of people that I was meeting at Dan's event compared to some of the other events I go to, shouldn't really be throwing shade at other events, but the calibre of people was, it was pretty good. They knew what they was talking about. And to be fair, even when I was meeting people that was on the start of their journey, they was just interested and they was hungry to learn more. Whereas at other events, I weren't always getting that.
I think the key themes being is what type of entrepreneurs you're meeting at SAS London. It seems like they're sophisticated and they're actually trying to add knowledge and take their journey forward. Is that fair to say?
Definitely.
And how do you help them? Because you're the master insurance, right? And we've been talking insurance today.
Yeah.
So you've helped a lot of people with their insurance needs and changed their mindset and educated them, right?
I think the one thing that we tend to focus on with it tends to be property investors, property developers, is just trying to get the rebuild sum insured correctly. And I think with the developers in the main, it's not how much they can do it for. It needs to be an agreed RICS valuation, and it's just helping people in that process and understanding it.
Love it. Huge value. Thank you.
Cheers, mate.
Cheers. Hi, everyone. It's another Love SAS London one-on-one here with Ed.
Has he?
Ed, I love bigging up SAS London. Why do you love SAS London?
I love SAS London because you get to meet all these different people who have different strategies and different views, different objectives in their lives, and you get to learn so much more outside of the bubble of what you do every day.
Wow. And also, Ed, how do you find the entrepreneur journey that SAS London helps give people?
I think there are different entry points for the people who are joining SAS London, and they get different outcomes from joining. You can meet people who are fairly inexperienced to those who have done many property deals in the past. And I love understanding where they are in that journey so we can find solutions for them and make the process better and make their outcome better.
And I think that's the key thing, meeting like-minded people, and that's a constant theme, and then making their bespoke real activities, if I can say it right, make come true. And these are what Ed does. So thank you for that. Cheers. Hi everyone, I've got John here for another person from the SAS Power Group. John, thank you.
Thank you very much.
The key question, why do you love SAS London?
I've been to many networking events across the country. SAS London's one that I've really took to. I'm there pretty much every month. The reason I love it is that there's a wealth of knowledge within the room. For me personally, there's usually a bunch of my investors in there, there's a bunch of developers that are looking for funding, and there's a huge amount of knowledge between pretty much everyone in the room.
I think you put in a nutshell, how do you help entrepreneurs? I know we've touched on this. Give us a quick little update on that.
Yeah, right the way through. It's not just for what we offer at Source Capital. It's across the board. It's just having those conversations between me, one or two or three people in there. We'll often do a roundtable So we'll help people answer their questions, because that's what networking is about. It's knowing what somebody wants to achieve and how can we get to that solution.
Just to add to that, is investing that money from the pensions and getting a return. I think your average return over 5 years is what, 12% a year?
12% per annum, yeah.
Can you believe that? Tax free. Don't you love it? Thank you, John.
Perfect. Thank you,
Perfect.
Zeke.
Cheers. Thank you. I love this. Or power team, whatever you want to call it, Usman. Thank you. And if anyone doesn't know Usman who he is, they will know now. Usman, why do you love SAS London? Let us know. Tell us. Come on. Don't be shy about this.
I'm not sure. I don't love it. It's work, and I just come and try and get paid, and that's the honest truth of it. I'm not going to stand here and lie,
Oh my God,
Honesty
he's
is
such
the
a
best policy,
liar.
right?
He's a liar because yesterday he was running the party. Afterwards, I'm like, I'm going home now. He's like, I'm still here.
Yeah, I was.
And
No, I do love it. Everyone's decent. Everyone's a sophisticated investor. It's my type of networking event. Everyone knows what they're doing. The people in the room are solid. All the power team are solid. And everyone, the vibe is good.
And also, you love meeting entrepreneurs, right? And you meet, as you said, sophisticated entrepreneurs. How's that different to other networking that you've been to?
I'm fortunate enough to be someone who loves what I do, and so when I meet sophisticated investors, they fully take advantage of the service that I offer, and for that reason I add that value, they appreciate that value, and I get a client for life, and I love it for that reason.
Just to remind everyone, this is the Capital Allowance Entrepreneur Extraordinaire. He helps people get that cash-free income, so you gotta love it. Thank you, Usman.
Cheers, buddy.
Thank you so
Thanks a
much.
lot.
So one of the things we wanted to do is, because SAS London is something that we all attend, and we wanted to see how we add value and how we make entrepreneurs understand what's available out there and try to have it so they've got to end-to-end journey. And that's why I wanted to have a discussion today. So I'm really appreciative of all you guys. They've loved the hospitality. You can check that out, what's left of it. And we're going to do some brainstorming today. So I hope you get value for this. So we're going to start with John. So you're going to give a bit of insight about your stuff and how you've been helping entrepreneurs in the SaaS.
Yeah, absolutely.
journey.
So I've worked within the SaaS community for about 5 years now, working with investors right the way through from them having their SaaS originally to invest in it, reinvest in it, looking to do different weird and wonderful things with it in between. So from what we do at Source Capital, it's quite a simplistic strategy. It's a third-party lending through an FCA regulated peer-to-peer platform where we offer up to 12% returns per annum.
Wow.
A lot of the people in the room are trying to create their SaaS strategy, what they want to do. And we'll move on to Ed in a minute to talk through structuring the deals when they find an opportunity. But a lot of the time it's at the initial stages of, oh, I know I've got control of this money now. What do I do with it? How do I work it? What do I want to achieve in the future? And we try and help that discussion to give them a greater idea what's available.
I think you've made a really good point, and the reason why we're talking about SaaS in this case, using it, is when it goes into the SaaS, it's tax-free. So they get in the full 12%, which is the huge benefit of SaaS, because they don't pay income tax, no corporation tax, which is the relevant taxes that you would pay if you had in different structures. So it's huge value, isn't it? Because 12% gross, massive.
Yeah, and it's short-term lending as well. So it's compounding effect that every 6, every 12, every 18 months, whenever a project repays, you get your capital plus the interest. Our reinvestment rate's around 91%.
Wow.
So it's quite a lot of investors that go back in and back in and back in.
I've got a bit of a question on that. One of the questions I wanted to ask is risk. Because when I see a lot of people, especially doing third-party lending, risk is an issue. Are they potentially losing all their money? And what has happened over the last 5-6 years since you've been offering?
Yeah, great question. So we are in a realm of third-party lending, but it's completely different to finding a borrower who's looking for 100,000. That's offering a personal guarantee, no security, offering a second charge. So we offer a first charge security over the underlying asset. It's peer-to-peer, so there might be one investor in a loan, there might be 100 different investors in a loan, all putting in different sums to make up the total loan amount.
Yeah.
That security is insured across all of the investors. So the risk is still there with the development, but you don't need to put as much in, and you've got a first charge rather than a subservient security.
So this is just for people watching, it's for property investors who are using their SaaS pot and they want to know how they can use it in different ways and have opportunities, and you guys are help facilitating that.
Yeah, it's a simple hands-free opportunity within property. If you're looking to do something more complex and you're looking to buy an asset, you'll need to structure the finance, and that's where Ed comes in, and Ed will be able to talk through different people in the room and what they've done and their experiences and how he's been able to help structure that. From our point of view, it's a simple investment strategy where you want to just put the funds away, wait a year, 2 years, have the return, and then maybe look at something else.
Well, my last question: how regularly do you pay the return? Is it annually, quarterly?
It's rolled up to the back end of the project. So
it.
you would invest into a specific property development or property loan. That could be 6 months, it could be 12 months. If you invest into a 12-month loan, it doesn't mean that you're going to get repaid in 12 months.
Wow.
Could be repaid earlier, could be repaid later, there could be a delay. So generally, it's about 11 and a half months.
Wow. Thank you for that. Really appreciate
all right.
it. You mentioned Ed. Ed, thank you for coming in. Was going to add value because you've got so much knowledge, and we're having a chat off air about all of this. Can you give a bit of insight how you've been helping entrepreneurs, especially SaaS London entrepreneurs?
Absolutely. So we're property finance. We're a whole of market broker, so we can do regulated and unregulated.
Wow.
The key with an investor, especially an investor who has a SaaS pension, is that they're going to have a lot of assets. The SaaS isn't just going to be their only asset. So they have a main residence, perhaps interest in property development, lots of different angles. And that's really crucial in this sort of market with higher interest rates, where lender assessment on what you can borrow is really squeezed. So having all those different assets means that we can look at their client profile, have a holistic view as to everything that they've got, and make a deal work, not because the property itself achieves the finance, but them as a client, their profile ticks the box. So we can do lots of different loans to enable a solution. And that's really key with, so if you're more affluent or sort of an investor who's got a lot more going on.
I think this is really key. We're talking about property investors in this part of the show. And one of the key things is actually them knowing the options and being able to work with people, because it's not, and most people will hear this and probably hear this, the computer said no. And that's it.
Yeah.
And that just gets people going crazy. I get so many phone calls. This person told me the computer said no. And I'm like, you've got great credit. You should be getting this. It's because the person hasn't spent time understanding their situation.
Absolutely.
Hasn't got the access to the market, which you obviously have, and also knows all the different products that will be relevant, and the lender, and has relationships with the lender. I mentioned a lot there, and the reason why I mentioned is this is all the relationships that you've got to master, especially to be able to offer the right offering and that bespoke offering.
Absolutely. When you're tied or have a very narrow field of lenders, your options are limited, your offering is limited. When you can sort of understand different angles and also lean on everyone in this team, you enable so many solutions.
100%.
And also we can communicate that to the lender. So if the lender's focusing on, okay, well, the client's got this income coming in, they've got to service the debt off that income, and we've got to factor in all the tax they've got to pay. But actually there's a big capital allowance that we can bring into the table by leaning on Usman here. That enables me to have a conversation with the lender and maximise the debt, because we've communicated the tax position and how strong that cash flow is going to be.
I think you've raised a really important point, because a lot of people don't understand the whole facets of being a property investor, right? As we're talking about property investment, and you mentioned tax, which most people know a little bit about, and what we try to do, just a little this is the stick I've been getting, we definitely need more ladies here. They're not nicer. I know we've got some outside team as they may come and help me out here. The reason being is it's end to end, and it's about how we're helping that journey. Exactly. And I find a lot of people haven't took structuring advice, they haven't had an accountant, tax advisor who understands property.
Absolutely.
And also made sure the right introductions have happened, because no one can do everything. We've just mentioned, and there'll be more that we're going to be mentioning, is how does an entrepreneur think end to end? They won't know this. And hopefully they're watching the video and they're understanding the different options. And there's many more outside this as well, but we're trying to cover the key ones. And it leads me nicely onto Usman, who I've worked with quite a bit with on a lot of stuff. One of the least taken advantage of allowances when you're buying property for investment purposes, whether it's commercial, service accommodation, furnished holiday lets, just to name a few, is capital allowances. Let's add a bit of value, Usman. I know you're going to... Capital allowances, right? What do you find commonly that people why they don't understand it?
I mention it quite often. The biggest issue that we have in our industry is raising awareness around the subject, because people just don't know about it. And that's essentially what we're trying to accomplish here. Is with the SAS London event, there's just a hub of specialist knowledge across the entire journey from start to finish for anyone who's coming to invest in property investment. One of our biggest issues is raising awareness and bouncing off everyone else. Like Ed said, we just use that as a platform to raise awareness around the subject and essentially let people know that there are so many specialist areas of tax. I'll lead into tuition in a minute, obviously another area of tax that we can cover. But my one particularly is capital allowances, which is all about the plant and machinery that's embedded in a commercial property. Anyone who buys a commercial property is entitled to capital allowances. There's a bit of diligence that needs to be done beforehand, but essentially everything barring the bricks and the mortar, everything else that makes up the building, you can claim tax relief on. And typically it's up to like 40 to 50% of the purchase price. And it's massive. It's huge.
I think what you've raised is so huge because people don't realise the cash flow benefit. So let's use a little example, and I know people do it. So imagine someone bought a £500,000 property, right? If it's commercial to whether it's service, contract, furniture, or there's a range, right? It could range from 20 to 40, 45%. That's just on the purchase. And that is tax-free money. And let's put it into numbers. That's between 100, if my maths is doing me right, 100 to 200,000 pound potentially.
As a minimum up to like 450, almost £500,000 worth of allowances. That just makes essentially any kind of commercial acquisition that much more viable if you're entitled to retain that amount of income. So if you can earn up to £500,000 worth of tax-free income, then all of a sudden you can keep that money in your pocket, you can reinvest it back into the business, buy other properties, and just it goes on and on. And it's just a long-term investment into your property investment strategy.
And I think that's why the structuring and advice that I've been talking about is how do you put all of it together? So important. And there's so many facets, and you need a team of specialists, and that's what I think SAS London. We haven't got Dan Torres there. I know he's going to be watching. You know, I think he's recovering from last night, to be honest. But he's such a pivotal factor because he's
Where's he recovering from?
I think without getting in a lot of trouble, because he may delete when he sees the video. But one of the things I think he's tried to do, and I really applaud him on this, is to bring like-minded people together. 100%. And there's many other people besides the people that have come to this meeting today, and we're going through all this stuff. It's all about value and trying to take advantage of all the people's different expertise. This leads nicely onto Ish. And Ish, great presentation. If anyone watching it, we'll be releasing that. Thanks to Ish, because he did a great presentation last night. When you see the video around SAS London November. What I wanted to understand, Ish, is a lot of people have no clue about land and remediation relief if we focus on that.
Exactly.
Open their eyes, please.
No, yeah, I think that's probably one of the main, even like with Usman in terms of capital allowance, land remediation, a lot of people not even know it exists. So they literally invest in a property, they do what they need to do it up, and then leave. However, if they've purchased either a property or a piece of land and it's contaminated, all the money which they've spent to decontaminate that land, they can actually get tax relief for that. So if you're a property investor, you can get probably about 150% tax relief on the qualifying expenditure.
Wow.
You've actually spent into the property to actually decontaminate that. So if you had subcontractors like a demolition company to get rid of asbestos, Japanese knotweed, anything like that which is contaminated, we can help you get a big tax relief for that. A lot of people don't necessarily know that, but here we are together to really make sure people are tax efficient, essentially.
I think it's so important because we talk about so many different areas. There's accountancy tax, which obviously people like me go on about. There's other aspects that we talk about, financing. We've been talking about how do you invest your funds, which John was mentioning as well. And now we're talking about some specific reliefs which are not mainstream. These are not run-of-the-mill. People who are specialists in that area have to understand your project and then action it. And I think that's the key. Alfie's just saying to me, I'm going out of short, so you missed it. That's what's happened. So you've mentioned, obviously, and I think you did a presentation. And
yes, I did.
How have you helped property investors on this? Because I know you've done asbestos and all these. What other things are they not aware of? Because you mentioned something yesterday stuck in my head about commercial conversions and things like this.
Yes.
But I guess that was more on the R&D side, was it?
That's more on the R&D side. So I've had one of a property investor / developer. He literally turned dog kennels into single or multiple different dwellings. Now, because they actually erected it in a different way than what is normally out there, is an advance in the field of construction. So as long as you're hitting two criteria, which is a technical advance in terms of construction and is technologically uncertain, basically a challenge in construction, you're deemed as research and development. Now there's a huge tax relief for that.
Wow.
If you're a profit-making company, every 25p out of every pound spent can be claimed back as R&D. If you're a loss-making company, 33p out of every pound can be claimed back as R&D. So really it's knowing exactly what you're doing, exactly who to speak with, and I can speak with property developers at the beginning or the end of their journey to ensure that we're classifying and categorizing costs efficiently to make sure that they get the most tax back as possible, essentially.
I guess one of the differentiator which we're going to do, because this is the first one we're talking about property investors, is that it's quite interlinked.
Correct.
Because what we define, or people define from a tax perspective as a property investor, isn't necessarily how planning and all the other rules work. And you're sort of talking about what the opportunities are depending on their project.
Correct.
And that's why you need bespoke advice, right? And this is just to give you ideas on all the stuff available. And now, not leaving to the least person, but very important
Best and last.
person.
Ricky,
Yeah, the best and last. Right, Ricky, do you know what? Insurance is such an area where people, a bit like accountancy and probably financing, they don't realise why you need someone on your side.
Definitely.
Right? Give us a bit of insight,
I
Ricky.
think obviously we're talking property investors, and I think the most common, even from sophisticated investors, I think the most common question I get asked about is establishing a rebuild value. Often they'll give me a value that they paid for the property, and it's obviously that's not the value that we're looking for. We're insuring the bricks, the mortar to rebuild the property, and the amount of times that people are pulling a figure out of the air and they don't really know their numbers. So something that we've looked into recently is desktop surveys. We can now help people, because obviously I'm not a surveyor. We can't give advice on rebuild. We have anyone can sort of have a rough idea, but we've invested in outsourcing desktop surveys. So now we can help property investors know their figures, less than 150 quid, and it then removes the average clause from the policy as well.
Wow.
I think the other angle, just to throw in there, where you've actually helped some of my clients, is where there's a problem with the property that you can overcome. Like if there's a subsidence issue, a lot of lenders will have an excess limit that the policy can't go over. And so where you have especially helped my clients is having that access to available products and solutions, which actually not a lot of insurance providers can provide.
I think some brokers are tied into specific insurers, whereas obviously we're not at all. We're fully independent, and we've got whole of market. So we try and pair people with right insurers based on merit and business rather than commissions or being owned by an insurer, which makes life a lot easier.
I think Ed raised a really good point there, and I didn't even think about it, is when you buy subsidence properties and things, a lot of times there's so much issues to get financing, insurance and all these things, and this is knowing the market, obviously knowing who's providing it, and that's why being brokers or who are actually leading it rather than just following a certain model. This computer said no for this product. I guess you guys have got a relationship with the end insurers.
I think at the moment we're heading into a hard market, so it basically means there's less insurers per class of business. So it's prominent that you work with someone that knows their markets. We was talking about it at lunch earlier. When a client goes to multiple brokers and they go to an insurer, if an insurer sees the risk from more than say 2 brokers, 9 times out of 10 that underwriter's just going to switch off and not even bother quoting. And we do see it a lot in the property investor world, where you need to be tight with your broker, you need to be upfront and honest. CCJs, liquidations, these are all things that we can overcome, but we need the facts to be able to help and find a solution.
Honestly, best policy, right?
Definitely.
And I guess you mentioned something there, and I want to just dig a bit more into it, is you're saying as we're recording this in November 2023, right, that you're saying the market's there's less providers. Why is that? Just for the
claims, cost of claims, insurers wanting to focus on specific targets, specific products.
Right.
We've seen it in the main sort of off key a little bit, but surveyors, we had surveyors that probably a year ago were probably paying a couple of grand for their insurance that are now paying 30, 40, 50,000, which, you
Why
know,
is that?
just people pulling out the market. You know, there was probably used to be 20, 30, 40 insurers. Now there's probably 3 or 4.
Is that because there's been a lot of claims in that?
A lot of
part?
claims, yeah.
What was the claims for? Just so.
Don't know specifically.
But it's caused a
Yeah,
lot of problems.
definitely, yeah.
And this is how the market is, I guess, on insurance, is that more claims, unfortunately. You know, I've had this when we've had a whole amount of tax investigations, right? We had a few years ago, for some reason, HMRC were doing random ones. To be honest, I'm not saying we did win them, but that doesn't bring back the insurance. The insurance still went up. I was like, I still lost.
Yeah.
Right, and now it's got to a point you have to pick really clearly what you're going to use your insurance for. So getting that knowledge and insight, I guess, is massive.
Definitely.
Right? And do you know what? I think this highlights a lot, and this is what I was talking about earlier, is the value. Because as an entrepreneur, you turn up to SAS London, right, and you don't know what to do. You probably don't know much about SASs. First bit is you try to invest time, you get knowledge of SASs, but you don't know how to use all the benefits of the community. Because it's a community, and I think that's what I want to do. And trying to make sure you get people who are like-minded, who want to do the best for you, and try to work with you to get that value, which you won't know, because you can't be a specialist in everything.
No, of course not.
You know, anyone who tells you that, they're lying.
And that's actually one of the major benefits that I've actually experienced personally from having this team around me.
Wow.
Is that I can expand my knowledge by learning off of these guys, and then when I'm speaking to a client, I can spot certain opportunities. So, for example, with a property development, build costs have gone up with inflation, the margins are all squeezed. But if we can get a tax claim back,
100%,
or make it tax efficient on the way out from capital allowances, it makes a deal work. And you don't have that knowledge if you don't have the contacts.
Ed is raising what we're going to do in our second case study around how to property developers, because they are different and they have different challenges and different benefits dealing with different people, but it's getting that insight. So we're going to have a couple of minutes break and then hit property developers. Thank you so much.